So we do think gas prices will continue to trend lower, and by Q1 next year, averaging below 100 euros. So that is a bearish path. I think there's one really key driver of that, and that is the fact that gas storage in Europe has risen to very complete levels over the past few months. So there is a significant buffer for Europe now to enter the winter period. We've achieved that because we're seeing greater flows of LNG into Europe. We're also seeing greater fuel switching away from gas to other hydrocarbons, and ultimately demand destruction from certain sectors. So that has created an easier environment. But I think we shouldn't get too carried away. I mean, I think there is clear risk that path could come under threat from weather. A much colder winter than normal would certainly tighten the market. And I think the other thing is, as we move into next year, the full year is going to still be very tight, and still we'll see very high prices. So this crisis isn't over. We're just having a temporary reprieve, we think, over the next quarter or so.
So, but in other words, also 2023 will be a year where we will talk about gas prices and gas availability?
Absolutely, yeah. We think for the full year in 2023, you'll still see gas prices averaging well over 200 euros. So it's an environment where industry and margins and energy costs will remain very high, and that will keep a real restraint on the ability for Europe to sort of snap back from this episode.
Let's talk about the Russian oil as well, because clearly towards the end of the year, the embargo will kick in. What is your outlook for the oil market?
Yeah, I think that's an absolutely key point in the oil market story. We think when you get that ban on Russian exports into Europe, that is going to feed into much greater constraint on Russian production. And ultimately, we're expecting at least 1 million barrels per day of Russian production to come off as a result. I think as you go into next year, the next key story in the energy markets is going to be tightening in oil and materially higher oil prices. So gas may be coming off for now, but then oil is going to kind of take the baton as the next kind of bullish story in the energy sector.
Does that also hold true for diesel? Because diesel recently was surging, and it's like the labor horse, so to say, yes, for the industry.
Yeah, and there are very strong correlations between the oil price and products. So I think if oil's going to move substantially higher, then we are likely to see fuel prices going higher. So clearly for policymakers, it's going to be another headache in terms of inflationary effects on household and industry spending.